The American dream. Homeownership is a big part of that. But what if you have no money? Well, that's not a problem. All you need is 3% on your down payment. That's it. With just $30,000, you can own a $1 million home. Why pay $1 million when you can just pay $30,000? Exactly. Absolutely nothing bad can come of this. Well, could it? You came here for the truth, so let me unveil that for you. Today we are going to look at how you may not have income, you may not have a job, or any assets at all, but you can buy a home. Let's get into it right away. Freddie Mac, they have released Home One, and that's more flexibility for maximum financing. Freddie Mac, thank you. Qualify more first-time home buyers with our 3% down payment solution. If you want to maximize your financing, that means take on more debt, then all you need to do is give Freddie Mac a call. Freddie's a good guy. Freddie likes to give out a lot of money. Freddie makes sure that everybody can live in a home even when they can't afford it. I seem to remember some information from about a decade ago where Freddie Mac had a similar program. And then it expanded and expanded and expanded. And suddenly we found out that Freddie was giving a lot of mortgages to people who unfortunately couldn't pay that back. Well, Freddie admitted his mistake, and today we see the same thing happening yet again. Freddie, you're a good guy, but I think you need to smarten up. Well, let's take a look deeper into these programs. It's been more than 3 years since Freddie Mac rolled out a conventional mortgage that required just 3% of a down payment. 3%. But hang in there, because I'm going to make this get better and better and better. You may not even have that 3%. So don't worry. You're going to be able to get that home. Remember, you don't need a job, you don't need any income, and you certainly don't need any assets. The program, which is designed for qualified low and moderate income borrowers, saw reasonable progress over the last few years. Freddie's 3% down program, along with a similar one from Fannie Mae, was continuing to grow. All right, so what we are looking at here so far is Fannie Mae and Freddie Mac both offering a program where all you need is a 3% down payment. That is super low. But now Freddie Mac is about to supercharge its 3% down program and launch a widespread expansion. So all of the deniers who suggest that this isn't a fragile market, that this isn't the same exact thing that we experienced a decade ago, need to understand that it's not just 1, 2, or 3 people that have been buying these homes. It is an expanding program, and really, it never stopped. Now, the percentage-wise may be lower than what we had seen previously. But these days, they found new tricks. Okay? They don't use the term subprime like they used to. I've covered this here on the channel before. They can get around all of that. They know that they're going to be, eventually punished for doing what they have. And so, you just find a little loophole. Find a way around. Freddie Mac announced Thursday that it is rolling out a new conventional 3% down payment option for qualified first-time homebuyers. What makes this program different is that there are no geographic or income restrictions. I told you, you don't need to have any money. There are no income restrictions. So feel free to give Freddie a call. The new program, which is called Home One, puts Freddie Mac in a direct competition for mortgage business with the Federal Housing Administration, which also only requires 3% down on some mortgages. There you go. You have the FHA, you have Freddie Mac, and Fannie Mae all offering these very, very low mortgage down payments for mortgages, but it's not done yet. Hang in there. According to Freddie Mac, this new offering is not replacing its Home Possible 3% down mortgage. Rather, the program is meant to complement their Home Possible program available to low and moderate income borrowers. Okay, so there we go. You have Freddie Mac actually offering two programs, Fannie Mae and the FHA. But hang in there just for one more minute. In the last few years, several lenders unveiled ultra-low down payment mortgages, with some requiring, check this out, no down payment from certain borrowers. That's right, if you have no money at all, you got $0 in your bank, but you're walking down the street and you see the nice home, you can buy that home. Don't worry about the fact that you're in debt. Don't worry about the fact that you have no cash in your pocket or in the bank. You will qualify. Have no fear. If the first company doesn't take you, just call the next. Fannie Mae and Freddie Mac spurred the movement by beginning to buy loans that only require borrowers to put 3% down. Okay? You have those companies. Then, Bank of America, Wells Fargo, JP Morgan Chase, and other major lenders began offering loans with a 97% loan-to-value ratio, meaning you have to put 3% down. So what do we have so far? We have Fannie Mae offering two programs. We have Freddie Mac offering two programs. Fannie Mae, you have the FHA, and then you have Bank of America, Wells Fargo, JP Morgan Chase, and others, all at this 3% mark. But that's not enough. They had to take it down a notch further. But other lenders went even further in an attempt to serve borrowers who may not have the 3% required for the Fannie and Freddie loan programs. Quicken Loans and Guaranteed Rate each came out with a 1% down mortgage, with the remaining 2% coming via grants. Then, so that's 1%. So we have many, many, many different companies offering 3%. Then these two came out with their 1% down, and then Fifth Third Mortgage took it a step further and announced a 0 down payment mortgage program. Then you had Movement Mortgage offering a 0 down mortgage, and then Land Home Financial Services did it as well. So if you think it's just one company, if you think they're just offering it to a handful of people, you got something else coming. You have three different companies offering 0 down. Then you have 1%. Then you have a whole bunch of companies, including the big boys, at 3%. Does that mean that anybody could just walk in there and get it? Most likely, yes. But ultimately, there is fine print. There is fine print. There always is. So not 100% of the people that walk in the door are going to be able to get that. But it's going to be pretty close. Probably 97%, like their loan-to-value ratio. Fast Funds Financial Corporation announced today that it is wholly owned subsidiary NetLife Financial Processing has acquired the exclusive mortgage servicing rights for NetLife Financial Holdings from the holder for Florida Trust. It's going in talking about no doc or personal guarantees on their new programs. Okay, look at this. Let me go back. Offering an innovative new mortgage product that is not based on credit history, no doc or personal guarantees, secured only by the underlying collateral and life insurance policy on the borrower. Therefore, all that is required to qualify a mortgage loan is qualifying for a life insurance policy, a down payment that usually amounts to 10% of the purchase price, and verification that the borrower has the financial ability to pay the monthly payments. NetLife believes that the mortgage product will be attractive to a wide spectrum of potential borrowers, including first-time homebuyers, borrowers who have experienced prior financial difficulties such as foreclosures, bankruptcies, late payments, or credit problems, and presently employed who are current income would qualify for a mortgage loan, but who couldn't otherwise. And then it goes on, hey, look, you want to bypass the traditional paperwork? We got that. We got you covered. All right. They go on, a lot of detail, I'm not going to bore you. Essentially, if you don't have proper paperwork, don't worry about it. There's not going to be any checks. If you don't want to even fill out any paperwork, don't worry. You won't have to. All you need to be qualified is, are you able to get a life insurance policy? And I'm sure they can make sure that paperwork is fraudulent as well. Okay, these are the programs that they've set up. So I want to take you back into the pages of history. Don't go anywhere. I'm going to show you how this problem is global. This extends to Canada, the Netherlands, and so much more. See you there.